as a possible area of resistance. Huge week for the moving averages. The first ever stance on the market score. Hey everyone, welcome to the first episode of the Path to Profit podcast. My name is Bobby, and this is the Rapid Review. So before I started trading, I completely thought the market was rigged. I thought there was no way to find the next big stock, and I thought there was absolutely no way possible to time the market. I quickly found out that was completely false. Started coming across guys like William J. O'Neill, Mark Minervini, and other great, big, legendary growth stock traders. And so they were all using very similar methods in order to get in and out of the market at the right time and find the next big growth stocks. So what I've decided to do is basically take my weekend routine, understanding what's going on in the overall market, the industry groups, and much, much more, package it all together and give that to you guys every single week so you guys can speed up your weekly routines. So without further ado, this is the Rapid Review. All right, so our agenda is going to be down in the description along with timestamps if you guys want to jump around. But let's get started with the current state of the market. So market direction, we are in a confirmed uptrend. We've spent 15 days in confirmed uptrend, about 3 weeks. In terms of distribution days, we started off the week with 2 distribution days on the S&P and 1 distribution day on the NASDAQ. However, on Wednesday, we did lose that distribution day on the NASDAQ due to percentage movement on the index. We were 5% above the close of that distribution day, eliminating it, which is a positive sign for the NASDAQ and the overall market. But jumping into our distribution day tracker to take a look at the 2 days that are on the S&P, you can see there from the 17th and 18th. In terms of time, we need 20 days to eliminate those distribution days, so we got a ways to go there. In terms of price movement, it's 5%. So yeah, we're close on the 18th, maybe, possibly on the 17th. We need a pretty big move over the next week in order to eliminate those 2 distribution days. So this is just something to keep an eye on. If we're gaining distribution, that is a negative sign. That's a bearish sign. If we're losing distribution or not accumulating distribution, that's a positive sign. And if you're new to all this stuff, how to make money in stocks, ibd.com has all this information to really dive deep into it so you can get an understanding of all these concepts. All right, moving averages. Huge week for the moving averages. The NASDAQ makes it above its 200-day simple moving average for the first time since, I'll give you guys a second to guess. January 14th, 2022. Over a year since the NASDAQ has been above its 200-day simple moving average, but made it through this week for the first time. Positive sign. Along with that, this is the first time since, January 3rd, 2022, that all the S&P, NASDAQ, and Dow are green on the 10, 21, 50, and the 200. Really, really positive sign for the market. So just some interesting stats for you guys as you take a look at some positive movements that we have had over the past week. All right. Speaking of the week, the S&P was up 2.47%. NASDAQ was up 4.32%, and the Dow was up 1.81%. And for 2023, the S&P is up 6.02%, NASDAQ is up 11.04%, breaking into those double digits areas, and the Dow is up 2.51%. So there you have our information on what's gone on over this week. Next, let's take a sip of coffee. And jump into the index chart breakdown. So we're going to jump over to Think or Swim. And I like starting off on the NASDAQ. So looking at the NASDAQ, like we mentioned, the big to do here was getting above that 200-day simple moving average, that green line that you see right there. But the other really positive sign, and I've been tweeting about this. I've also been putting it in our Discord channel. If you want to join that, link in the description for that. But we have this big trend line. And you can actually see it even better when looking at the weekly chart. We finally broke above that downward trend line. Does not mean we're out of the woodwork. That does not mean that everything's good. Just dive into the market, go on margin, things like that. But it is a very positive sign to be seeing that and something to take note of. So keep an eye how we act around these two levels. And yeah, I guess with that being said, key levels, the 200-day to me is probably the most important right here. We really want to try to stay above that. If we end up where we get stuck back below it, and this is just a 1-2-day thing, negative sign. If we can show that we're showing some support and being able to hold ourselves above that, that's a very, very positive sign. Further on the downside, I'm probably looking over here at the 50-day simple moving average in red as my kind of line in the sand for this market. Chances are stocks are going to knock you out before then with your stop losses, but it's still something to pay attention to. And on the upside, I would also keep an eye on this yellow price level right here, which is dating back to June 2nd, 2022, as a possible area of resistance. Doesn't necessarily mean that we're going to get stuck there, but good chance you could see kind of a pause if we do get up to this level. But we got a ways to go, just something to keep an eye on going into next week. We're going to jump over to the S&P quick. So S&P was not as it's not as bad of a history as the NASDAQ had with its 200-day simple moving average, but nonetheless did get above it this week and did also get above its trend line. So you can see that on the weekly side here too. Really, really pronounced when you look at these both on the weekly side, showing you this longer term trend downward and this finally getting this break of that trend for the first time in a long time. Again, doesn't mean we're out of the woodworks, but definitely you could see there's something changing with this past week's action. Same thing though, in terms of key price levels, I would watch the 50 and the 200. Actually, one of the things to note here is how tight all these moving averages are acting. And we're starting to get where the moving averages are starting to cross in the right way. Actually, forgot to mention this, on the NASDAQ, we actually had a great cross, the 10 and the 21 crossing above the 50, which is really, really positive too. So just to throw that back on the NASDAQ quick. But yeah, other than that, 50, 200, up here at the price level from, again, June 2nd. Keep an eye on that. And you can also, I would mark this on your chart, the December 22nd low of that day. Just another possible low level if we do start playing around in that downward area. But other than that, that is all we have for the indexes. If you have any questions, feel free to drop some comments down below. Reach out to me. All my information is down below. Always open to answering any questions that anybody has. And a really big goal is to just kind of build a community so we can all work together to trade a lot better. Trade a lot better, to be better traders in this market. All right, so now next up, we have our industry groups. So with the industry groups, we're going to be looking at the top 10 and the bottom 10 weekly performers, the biggest jumps and falls in the rankings. And then we'll be looking at, for now, I'm going to focus on the top 10 industry groups. Write down below if you think we should switch to the top 20 and if there's some value in that. But we're going to be focusing in the top 10. And then we'll be talking about leading CANSLIM stocks breaking out and get you guys a quick way to put a watch list together. All right, so top 10 weekly performers on the screen. I think anybody who's watching the market knows that this week, Tesla, big move, really pushing the auto manufacturers up. A lot of people have been really paying attention. We've been seeing retail and things like that popping up as well, and steel. But other than that, I don't think many other things to really note other than that. Bottom 10 week performers, you can see those on the screen there. No big trends sticking out to me. Nothing that I think is worth really mentally taking a note. So that's just what we have there. Jumps, biggest weekly jumps in the rankings. Yeah, nothing really to make a note of. I mean, the retail, mail order, direct, that's probably the biggest thing to pay attention to that's going on right there. Paying attention to that group, internet content, good to see that. But other than that, nothing that really is screaming at me. And I'll talk a little bit more about this in my stance on the market, rating the market in terms of 0 through 10 scale on how I feel about the industry groups. Big news here, solar getting really hit, dropping 28 spots. Solar was one of those groups that I think a lot of us were really seeing a lot of potential breakouts over the past couple of weeks. I'm sure a lot of you have had them on your watch list, probably owned one or two as I have. And it looks like it took a huge hit this week. So that's something to pay attention to. Other than that, nothing else to add. But now we're going to be talking top 10 industry groups, and we'll be showing the Campos composite stocks. That's my last name. And that is the criteria you see on the screen. Goal is to just help you guys look at the leading stocks in those groups and also be identifying any of those stocks that are breaking out. So we'll jump over to MarketSmith and we'll start off with leisure, gaming, and equipment. So you can see that there. Number 10 jumped up 18 spots. Pretty good price movement. The trend line, I put slightly higher. I mean, I'd say it is probably trending higher. It's probably a better way to put it. Above all the moving averages, doing a very, very good job. So definitely a group to pay attention to. And we'll look at here is just the only stock we have. It is highlighted in gray. Churchill Downs is an actual stock, so something you might want to add to your watch list. All right, next up, we got leisure, movie, and related. Huge, huge jump here. Number 25 up to number 9. Good to see that. You can see the big price movement up 5.35%. RS and everything looking really, really healthy. But yeah, I mean, this is one of those groups that it's not like this catapulting move up, but it's in the top 10, so it's something to pay attention to. And when we look at the leading stocks in this group, none to speak of. All right, jumping over, next group, we have retail, apparel, and shoes. This is the Marty Shargan group. Huge, huge shout out to him. Great person to follow on Twitter if you are a growth stock trader, CANSLIM, Mark Minervini type style, anything related to that. Highly suggest you follow him on Twitter. The reason I'm shouting out him, he's a huge, huge tweeter of Crocs and the stock and that movement that's been going on for a long, long time. So really, really entertaining and actually valuable information if you follow him. So this group has been making a move, and this is one of those where it's kind of hard to get in. A lot of these stocks are extended. You can see just with the chart, it's been a pretty strong movement up. It did take a kind of a pause this week right here. But you can see above all, its moving average. It made a one position drop from 7 to 8 last week, but RS, everything looking good. That's really all I got to say here, except we'll also take a look at leading stocks in that group. There you have them. Nothing actionable. Like I said, most of these are going to be extended. Big fan of Deckers, Hoka's. Huge fan of Hoka running shoes. If you don't have a pair, definitely get them. All right. Next up, number 7. This is metal, mining, and ores. Number 12 last week, jumping up to number 7. Yeah, another healthy group. RS line. It's been flat over the last couple of weeks. But overall, I would say it's going upward. My RS trend line is based on really the past couple of weeks. So overall, like the RS rating shows, 96, which is healthy. Above all the moving averages, everything looking good. And we'll take a look in terms of stocks. Ton of stocks in this group, but only one is actionable. BHP is an actionable stock. The other ones are pretty much extended. But if you want to add them on your watch list, not a bad idea to keep a watch on those. All right, next up, number 6, steel producers. So we had mentioned that before. Steel producers dropping from number 4 to number 6. This had a weekly, that looks wrong. Oh no. All right, so pretty interesting there. We went from number 4 last week to number 6, yet had a 8.23% upward movement. I almost questioned myself looking at that because it just didn't seem right to be dropping in terms of that. But relative strength actually looks pretty healthy. RS line is higher, 97. My mistake here, though. We are above all its moving averages. So 10-day, we're above both all those. Other than that, we'll take a look at leading stocks in that group. You can see those up on the screen and highlighted. GGB and TS are actionable. All right, number 5, apparel, clothing, manufacturing. Another group doing fairly well. Number 16 last week, so a pretty big jump up, moving up 2.47% for the week. Healthy RS, above all the moving averages. And looking at the group stocks, OXM and TP are leading stocks there, and both are actionable. All right, number 4, apparel, shoes, and accessories retail jumping into the top 10 from number 11 to number 4, moving up 3.43% for the week. Healthy RS. RS line I put is kind of flat. It is kind of just moseying along in that kind of flat pattern. But above all, it's moving average. And we'll look at the leading stocks in that group. Just Buckle, BKE. Definitely one to put on your watch list and keep an eye out for. You guys can see it a little bit bigger. All right, number 3, we have retail, wholesale, office supplies. Also 3 last week. Solid move up this week, 2.48%. RS still looking healthy. Last couple of weeks, it has slowed down its upward RS line progression, but still nonetheless, everything looks pretty healthy on this one above all its moving averages. And looking at the stocks in this group, there are none. No actionable, nothing meeting the Campos composite stock criteria. All right, number 2, we have oil, gas, and field services. Oil and gas has basically been in the top 10 in some way, shape, or form for the past year. Not surprised to see it here, but did drop from number 1 to number 2, up only 0.93% for the week, still showing a 99 RS. RS line's been pretty flat over the past couple of weeks, which is probably why it's dropping down to number 2. So could it be that this is maybe an old trade? Possibly, but still showing that it has some relative strength. So just keep an eye. It could take some time to see the industry group swap. All right. And in terms of leading stocks, you can see a couple actionable stocks in there. CVEO, HALNOA, and SLB. All technically actionable. Take a look at those charts and a couple other stocks on there with the leading criteria. All right, last, number 1, leading the industry groups. We have retail department stores up from number 2 to number 1 with a 3.34% increase over the week. 99 RS line trending higher, above all its moving average. Definitely, I'd say the healthiest and strongest looking over the past couple of weeks in terms of the industry groups. And if we're looking at the leading stocks in those groups, 2 there, both actionable, ASAI and DDS. So there we have our industry groups. One of the things I did want to say about the industry groups, especially as the market may be turning around, maybe we lead into a new bull market. It's important to be patient with the industry groups, but also really keep a tight eye on them because it is going to reveal maybe the next big leaders in the next big market. But it could take some time for those to really work its way out, for the relative strength to push itself so that the top groups really make it to the top. So be patient with the industry groups, but keep an eye on them and promise eventually it will pay dividends. Not dividends you're thinking of. All right, so let's jump over to earnings. We're still in earnings season. You can see all those on the screen. Tons of different companies reporting. Companies like AMD, Snapchat. You got XOM, ExxonMobil reporting. You got T-Mobile, Peloton, Meta, Apple, Google, Amazon. So big week for reporting. And it's definitely something that you want to be keeping an eye on because you know those big cap names can really affect the market. All right, so here it is, the stance on the market. So this is my 0 through 10 rating on the market. Here is the market scale. This is the first, first draft of this scale. Feel free to comment below if you think there's a better way to define these categories that'll be more helpful for you. This is how I kind of look at my score rating system. So for this week, the first ever stance on the market score is 6.8. There you have it. I'll make that a little bit darker for you guys. So we have a 6.8. So based on our criteria, bullish with some concerns. Basically, look, the index charts are doing excellent. We saw that it really broke through some key points. Best we could expect, given where we were at in the current market, is a strong move right through those 2 price levels. breakouts are working. I'm sure if you've been trading, you've seen that there's been a couple successful trades. But it's not like one of those big moves where you feel like you can't go wrong, like a 2020 where no matter what you buy, you're making money in. You got to be selecting the right stocks, but there is some trades to be made. Things that are where my concerns come from. There is no clear leadership. We just talked about it in terms of the industry group, so that's something to take note of. The market still has to prove itself. We talked about this in the index breakdown, that it is one of those things where just because we've got above those trend levels does not mean we're going to maintain above those trend levels. We need to see some consistency and have the market follow through. Look, this is just one of those markets where I'm not willing to be 100% invested. I'd rather take some time and wait. And if this is going to be a longer term trend, then I'm going to have plenty of time. There's going to be plenty of stocks to really dive in and ride what could be a next big bull move. Then there's still some earnings out there, like we just talked about. We got a big week of earnings coming up with some big caps, so that could have a big effect on the market and something to be cautious for. So, look, this is by far, I think, the best that a lot of us have felt in a while when it comes to growth stock traders. But that doesn't mean you just dive right on in. That's why we're sitting at a 6.8 and we're not at an 8, 100% invested and ready to just dive in on margin up in like the 9s or things like that. So, comment below what your score is and why your score is that. Comment below if you think maybe there's something I'm saying that you just don't agree with at all and you think I'm an idiot. By all means, please comment. But yeah, other than that, that's where we're at this week, 6.8. Well, that really wraps it all up for the first episode of the Rapid Review. If you made it this far, please subscribe. And we're going to be doing this every single week. I'm going to be working on doing some chart breakdowns, some informative stuff in terms of breaking down different terminology, breaking down different chart patterns, and just things to help people improve their trading. I'll be talking about a lot of mindset stuff and how that applies to trading, and just tons and tons of different content that I'm hoping can help the entire community. But yeah, that is all we got for this week. So, like I said, down below, subscribe. If I'm able to get a chart breakdown out, I'm actually not sure if I'm going to do it. That'll be in the check this out. Or this, if I can get another one down. So you'll know based on when you watch this if I end up getting a chart breakdown out. But that's all we got for this week. Appreciate it. See everybody next week.